Welcome to the Property Wealth Podcast. We're really glad you're joining us today. You know, the real estate market is always evolving, and right now we're seeing a fascinating trend with the senior housing boom.
Absolutely, Sarah. It's really interesting how the 55-plus communities are becoming a hot topic for investors. People are realizing the potential for both growth and stability in that sector.
Yeah, and what's great is that it's not just about investing in properties. It's about understanding the needs of a growing demographic that's looking for community and, a lifestyle that suits them.
Exactly. There's a lot to unpack here, from the different types of properties available to the amenities that are becoming essential.
And let's not forget the financial aspects, like how to evaluate these investments properly and what to look for to ensure long-term success.
Right, and we'll also cover some common pitfalls to avoid, so you can navigate this landscape with confidence.
So whether you're just starting out or you're already in the game, there's something for everyone today.
Let's dive in. Where should we start, Sarah?
Well, let's kick things off by discussing the current trends in the senior housing market.
So, Sarah, when we think about the senior housing boom, it really ties into this broader trend that's happening in our economy. And for folks over 40, it's become increasingly relevant.
Absolutely, Mike. With the aging population, many people are realizing, wow, this is not just a trend, it's a wave that's going to affect us all.
Right, and for someone in their 40s or 50s, this is a unique opportunity to position themselves in a market that's only going to grow. Plus, it's about securing a financial future.
Exactly. It's kind of like a safety net, isn't it? Having investments in these communities can provide peace of mind as retirement approaches.
And let's not forget about inflation, which we've all been feeling lately. Investing in real estate, especially in 55-plus communities, can act as a hedge against that rising cost of living. Property values tend to appreciate over time, right?
Yeah, and rents typically go up too. So if you're holding onto a property in a senior community, you could see stable rental income that keeps pace with inflation.
Exactly. I once spoke with an investor, let's call him Tom, who bought a few units in a 55-plus community a few years back. He was worried about retirement income, but now those properties are generating a steady cash flow that supplements his pension.
That's a great example. And it's not just about the income either. There's also this emotional side. Financial security can really change how you feel about your future.
For sure. When you have that security, you can focus on what really matters, like spending time with family or pursuing hobbies instead of stressing about bills.
And that's especially important as we age. The last thing you want is to be worried about finances when you should be enjoying life.
Absolutely. Plus, many investors don't realize that there's a significant wealth transfer happening right now. Baby boomers are passing on assets to their children, and that's a big opportunity for those who are ready to step into real estate investing.
That's so true, and it can be a great way to build that intergenerational wealth. Imagine being able to leave your kids not just with memories, but also with properties that can provide them with income or a place to live.
Right. And as these communities grow, they're also becoming ideal places for your own family to downsize or relocate. It creates this circle of life, so to speak, where everyone benefits.
And when you think about it, it makes sense. As people age, they often seek out communities that offer social connections, amenities, and healthcare access. These are all things that can enhance their quality of life.
Exactly. And for an investor, that demand translates into higher occupancy rates and ultimately better returns. There's a real need for these types of properties.
I've heard stories of people who have invested in these communities and watched their properties literally fill up within months, sometimes even weeks. It's a strong market.
Yes, and that urgency can be a bit of a double-edged sword. You want to act quickly, but also wisely. So it's important to do your homework and understand the local market dynamics.
Right. And speaking of local markets, have you noticed how certain areas are becoming hubs for these 55-plus communities? Like places with access to healthcare, recreational activities, and good weather?
Yes, and those areas are seeing a boom in property values, making it even more attractive for investors. For instance, I've seen some investors target areas near popular retirement destinations. They're not just looking at the price today, but the potential for appreciation down the line.
It's all about that long-term vision, isn't it? You want to think about where the market is headed, not just where it is now.
Exactly. And I always tell investors, think about your own lifestyle too. Would you want to live there? If you wouldn't, it might be a red flag.
That makes a lot of sense. It's not just about numbers on a spreadsheet. It's about the quality of life for both the residents and the investors.
And let's not forget, the current economic trends show that many people are looking to downsize or simplify their lives as they age. They're seeking out communities that provide that sense of belonging and security.
So true. I've spoken to people who have moved into these communities and they just light up when they talk about the friendships they've made and the activities they participate in. It's really fulfilling for them.
Yes, and that's something you want to consider as an investor. The emotional and social aspects of the community can drive demand. People want to be a part of something.
Plus, with the rise of remote work, many retirees are looking for places that allow them to be more mobile. They might want to live in a community for part of the year and then travel.
Exactly. That flexibility can drive demand for properties that allow seasonal living. It's all interconnected.
So, Mike, it seems like there's a lot of potential here, both financially and personally.
Totally. And as we shift into discussing core strategies, I think it's crucial to keep these factors in mind, ensuring that your investments not only provide returns, but also contribute positively to the lives of the residents.
Absolutely. Let's dive into those strategies.
So let's dive into some core strategies and rules of thumb, especially when we're looking at senior housing or 55-plus communities. A good starting point is understanding the basic metrics, right?
Yeah, absolutely. I know you often talk about the 1% rule. Can you explain that a bit?
Sure. The 1% rule is pretty straightforward. It suggests that the monthly rent you can charge should be at least 1% of the purchase price of the property. So, if you buy a property for $200,000, ideally you'd want to be able to rent it out for about $2,000 a month.
That makes sense. It's a quick way to gauge if a property might be a good investment.
Exactly. And it's not the only rule, though. The 50% rule is also super helpful. This rule indicates that roughly 50% of your rental income will go towards operating expenses. So if you're bringing in $2,000 a month in rent, you should plan for about $1,000 in expenses.
So that leaves you with $1,000 for cash flow, right?
Right. And that's before you factor in things like mortgage payments or any other debt you might have. It's a good way to help set realistic expectations for your investment returns.
What about cap rates? I hear that term tossed around a lot.
Great question. The cap rate, or capitalization rate, is another fundamental metric. It's essentially the net operating income of a property divided by its current market value. So if a property generates $20,000 a year in net income and is worth $200,000, the cap rate would be 10%.
So a higher cap rate generally means a better return, right?
Exactly, but it's important to look at it in context. What's typical for the market you're in? In some areas, a 6% cap rate might be fantastic, while in others, anything below 8% might not be worth it.
Got it. So looking at local market conditions is key. Are there specific property types that tend to perform better in senior housing?
Definitely. When investing in 55-plus communities, you want to consider the type of properties that cater to that demographic. For instance, single-family homes or low-maintenance condos are often popular. They offer independence while also minimizing upkeep.
That makes sense. And what about financing options?
Well, traditional financing is always an option, but there are also specialized loans for senior housing. For example, some lenders offer programs specifically designed for properties that cater to older adults.
Do you think using a local lender is beneficial in these scenarios?
Absolutely. Local lenders often have a better grasp of the market and can offer more personalized service. Plus, they might have insights into specific financing programs that cater to the senior housing sector.
And when it comes to evaluating deals, do you have a checklist or something similar?
Yes, a simple checklist can really streamline the process. Start with location. Look for areas with growing senior populations. Then check the local amenities. Proximity to healthcare, shopping, and recreational activities can be big selling points.
Right, and what about the condition of the property?
That's crucial too. Always consider the age and condition of the property. If it's an older building, you might face higher maintenance costs down the line.
And don't forget about the community's rules and regulations.
Exactly. Many 55-plus communities have specific rules that could affect your investment. So it's wise to read through those and understand what you're getting into.
I think it's also important to consider the exit strategy.
Yes, always have an exit strategy in mind. Whether that's selling the property down the line or converting it to a different type of rental, having a plan is crucial.
So if I'm thinking about investing in a 55-plus community, I should keep all these factors in mind.
Absolutely. And remember, it's not just about the numbers. You want to invest in a community that's growing and thriving.
I guess that leads us to potential pitfalls. What are some common traps investors fall into when looking at senior housing?
Well, one of the biggest mistakes is underestimating the operating costs. Many investors assume they'll have a certain cash flow without fully accounting for things like property management, maintenance, and even marketing.
Right. That can really eat into your profits.
Exactly. Another pitfall is not doing thorough research on demographics. You need to know if there's an actual demand for 55-plus housing in the area you're considering.
And what about overestimating rental income?
Yes, it's easy to get caught up in what you think you can charge. Always base your projections on current market rates rather than what you hope to receive.
That's solid advice. And of course, sometimes investors forget the importance of community.
Absolutely. A community that fosters social engagement can be a huge draw for seniors. Properties that offer amenities like common areas or activities tend to attract more tenants.
Wow, there's a lot to think about.
For sure, but with the right strategies and a solid understanding of the market, investing in senior housing can be incredibly rewarding.
I'm excited to explore this further. Thanks for breaking it down, Mike.
So Sarah, when we talk about the 55-plus housing boom, it's important to address some common pitfalls that investors can stumble into. I've seen quite a few folks who get so excited about the potential returns, they end up over-leveraging.
Yeah, that's a big one. It's easy to get caught up in the hype, right? What happens when someone over-leverages?
Well, they often stretch their finances too thin, taking on more debt than they can handle. For instance, I had a client, let's call him Tom. He bought 2 properties at once, thinking he could manage them both. But he didn't account for the market fluctuations or unexpected repairs.
Uh-oh, sounds like a tough spot. So what did Tom do when things started to go sideways?
He was really stressed out. The properties weren't generating the cash flow he anticipated, and he ended up having to sell one at a loss just to stay afloat. It was a tough lesson for him.
That's really unfortunate. It's almost like a domino effect, right? One mistake leads to another.
Exactly. And then there's the issue of bad tenants. That can really derail your investment plans, especially in 55-plus communities where you want a peaceful environment.
Oh, I can imagine. What kind of situations have you seen with tenants?
I remember a situation with a property owner. Let's call her Lisa. She was so eager to fill her unit that she didn't do proper background checks. The tenant turned out to be disruptive, which led to complaints from neighbors. Eventually, Lisa had to evict them, which, as you know, can be a long and costly process.
Right. That's not just about the eviction itself, but also the loss of rental income during that time.
Exactly, and it really highlights the importance of thorough tenant screening. You've got to be diligent, especially in these communities where residents value peace and stability.
So what do you recommend to avoid those issues?
Well, invest time in your tenant screening process. Check references, do credit checks, and even have a face-to-face meeting if possible. It can save a lot of headaches down the line.
That makes a lot of sense. What about cash flow? I've heard investors sometimes ignore that aspect completely.
You'd be surprised. Cash flow is often an afterthought. I had a friend who bought a lovely property in a great location, but didn't calculate ongoing expenses properly. He thought the rental income would cover everything, but he didn't factor in things like maintenance, property taxes, or even the HOA fees.
Yikes! So what happened then?
Well, he ended up in a bind. His cash flow was negative because the expenses exceeded the rental income. He had to dip into his savings just to keep the property.
That's so stressful. How can someone better manage their cash flow?
It's all about understanding your numbers. Start with a detailed budget, considering all potential expenses, and always have a buffer for unexpected costs. Life happens. and you want to be prepared.
Absolutely. And speaking of unexpected costs, hidden costs can really catch investors off guard, can't they?
Oh, for sure. I had another client, we'll call her Anna, who bought a property without fully understanding the community's regulations. She faced unexpected assessments for repairs on common areas.
That sounds like a real surprise. So, what can investors do to avoid those hidden costs?
Do your due diligence. Research the community rules, ask about any planned assessments, and talk to current residents if you can. This can give you a clearer picture of what to expect financially.
Great tips. And what about timing the market? I know that can be a tricky game to play.
It definitely can. I've seen investors wait for the perfect moment, thinking they'll buy at the lowest price. Meanwhile, they miss out on good opportunities.
That can be frustrating. So what do you suggest instead?
Focus on the fundamentals instead of trying to time the market. Look for properties with strong cash flow potential and in solid communities. If you're waiting for a perfect moment, you might miss your chance entirely.
Yeah, that makes sense. It really comes down to solid investment strategies rather than guessing what the market will do next.
Exactly. And if you do find yourself in a situation where you've made a mistake, don't panic. There are ways to recover.
Oh, like what?
Well, first, take a step back and assess your situation calmly. Identify where things went wrong and what your options are. If you're over-leveraged, consider restructuring your debt or even selling a property if necessary.
That's good advice. And I guess keeping an open line of communication with your financial advisor can really help too.
Absolutely. They can help you navigate through the rough patches and keep your long-term goals in sight.
It's really about learning from those experiences and not letting them define your investing journey, right?
Exactly. Every investor will face challenges, but it's how you respond that counts. Recognizing red flags early can save you a lot of trouble.
Totally. So to wrap up this section, it sounds like being proactive and doing your homework can really set you up for success in the 55-plus housing market.
You got it. Investing is a journey, and being prepared will help you build lasting wealth.
And now, let's transition to the next steps for our listeners. What should they consider as they move forward in their investment journey?
All right. So let's dive into some immediate steps that our listeners can take right now to get started in this booming senior housing market.
Yeah, I think that's super important. It can feel overwhelming, but breaking it down into actionable steps makes it a lot easier.
Exactly. One of the first things I'd suggest is to familiarize yourself with the local market. Websites like Zillow are great for checking out current listings and understanding pricing trends in your area.
Right. And using local MLS access, if you have it, can provide even more detailed insights on properties that might not be listed publicly.
For sure. Also, if you're looking at potential deals, tools like the BiggerPockets calculator or Deal Check can really help you analyze the numbers. They break down things like cash flow, ROI, and even help with property comparisons.
Those calculators are lifesavers. And Rentometer is another one, right? It's fantastic for getting a quick idea of rental rates in specific neighborhoods.
Absolutely. It's a great resource to gauge what you can expect in terms of rental income. Plus, it helps you avoid overpaying for a property based on rental expectations.
Yeah, and if someone's just starting, I'd recommend setting a goal to analyze at least one deal per week. Just pick a property you're interested in, run the numbers, and get comfortable with the process.
That's a perfect way to build your skills without feeling overwhelmed. And speaking of building skills, joining a local real estate meetup can be a game changer. You get to network with other investors and learn from their experiences.
Totally. It's amazing how much you can learn from others who've already been through the ups and downs. Plus, it's a great way to build your support system.
Right, and don't forget about online communities. Platforms like BiggerPockets have forums where you can ask questions and get insights from seasoned investors.
Yeah, and listening to podcasts or reading books can really expand your knowledge too. I'd recommend checking out The ABCs of Real Estate Investing by Ken McElroy. It's straightforward and full of practical advice.
Great book. And there's another one I love, Investing in Apartment Buildings by Matthew A. Martinez. It dives into multifamily properties, which could be relevant for those looking at senior housing.
Those are solid recommendations. Also, there are podcasts like Real Estate Investing for Cash Flow that focus on different strategies. It's nice to hear success stories and learn from others' journeys.
Yes, it's all about surrounding yourself with the right information and people. And remember, it's okay to start small. You don't have to jump into a big investment right away.
Exactly. Maybe begin with a smaller property, or even partner with someone who has more experience.
Absolutely. Building those partnerships can also give you the confidence you need to take the next step. And don't forget, consistency is key. Make it a habit to dedicate time each week to researching and learning.
Right, whether it's reading, analyzing deals, or networking, just keep at it. Over time, those small, consistent efforts will add up.
And it's important to track your progress too. Maybe keep a journal or a spreadsheet of the deals you analyze, the contacts you make, and the lessons you learn.
That way, you can see how far you've come and identify areas where you might need to focus more.
Exactly. And as you become more comfortable, you might even start looking into financing options and loan products specifically designed for investment properties.
Yeah, understanding your financing options is crucial. Whether it's traditional loans, hard money lenders, or even partnerships, knowing what's available can open up more opportunities.
And don't hesitate to consult with a financial advisor who specializes in real estate. They can provide tailored advice based on your individual situation.
That's a great point. It's always beneficial to have a professional to guide you, especially when navigating the financing aspect.
So those are some practical first steps. With these tools and resources at your disposal, you're really setting yourself up for success.
Yeah, it's all about taking that first step and building momentum. Now let's bring this all together.
All right, Sarah. So as we wrap up, let's recap a few key takeaways from our discussion on the senior housing boom and investing in 55-plus communities.
Absolutely. One big takeaway is that there's a growing demand for these types of properties, right? With more baby boomers reaching retirement age, this market is really heating up.
Yeah, and that demand isn't just a trend. It's a significant shift in demographics. Investing in these communities can provide steady rental income and long-term appreciation.
Right, and we also talked about the importance of location. You want to look for areas that are not just popular now, but also have amenities and services that cater to older adults. That's crucial.
Exactly. And let's not forget the opportunities for community engagement. These properties often foster a sense of belonging, which can be a big draw for potential tenants.
Definitely. It's about creating a lifestyle, not just a place to live. And for investors, understanding that can make a huge difference in how successful you are in this space.
Well, building wealth through real estate is a journey, and investing in senior housing can be a solid strategy, especially for those of us over 40 looking to diversify our portfolios.
For sure. If you found today's discussion valuable, we'd love for you to like this episode, subscribe to our channel, and share your biggest takeaway or any questions in the comments. Also, think about sharing this with someone you know who's looking to invest in property.
Absolutely. Building wealth is all about sharing knowledge and supporting one another.
And next time, we're diving into an exciting topic. Data centers, the AI-driven real estate play for 2026. You won't want to miss that.
Thanks for joining us today, everyone.
We appreciate you being here, and we'll see you next time.